HMO, PPO, what the? Today, let's explore the 4 major insurance plans, their pluses and minuses, and as a bonus, I'll throw in an extra one. Welcome, I am the Medical Bill Whisperer, a previous billing manager turned patient advocate. I am committed to bringing answers, insights, and solutions to patients like you. First, a disclaimer. This video focuses on what are called commercial plans, meaning not Medicare, not Medicare Advantage, and not Medicaid. Although those agencies use the same type of plans, there are enough differences that would not fit in the format of these videos. So we'll talk about the plans you bought on the open market, through the Obamacare/ACA marketplace, or that are provided by your employer. Let's start with PPO, Preferred Provider Organization. This type of plan means that your insurance has contracted preferred providers, whether individuals or facilities, to offer patients easy and fast access to care and give them a discount when these services are used. Everybody wins. The provider that signs a contract accepts a reduced fee, but in exchange receives a set payment and other benefits from your insurance. In turn, your insurance pays the agreed upon price without hassles or delays, while you receive a discount. And your insurance is only liable for a reduced fee. That type of contract is called in-network. But if in-network means lower prices for your wallet, if you go out of network, it could turn to be costly. The second type of plan is called EPO, Exclusive Provider Organization. It functions the same as a PPO, except the network is much, much smaller and oftentimes restricted to a very specific geographical area around your residence. You may also find that EPO plans do not offer any out-of-network benefits. If you consult a doctor that is not on the short provider list, well, the full cost could be at your charge. But the network, however small, should still be able to provide you with any type of specialty to meet medical needs. HMO plans are another name for health maintenance organizations or managed care. You, the patient, are assigned to a primary care physician within an IPA or medical group where a number of specialists are available and connected. This specific local network can be restricted as far as access to medical services is concerned, as it depends on obtaining an approval or a referral from that primary care physician, even for visits with a specialist. Nothing beats an HMO for centralized, efficient care. POS means point of service. It is basically a blend between a regular PPO and a regular HMO plans. You do get both the advantages and the drawbacks of 2 kinds of plans. Let's go over benefits. PPO plans are very popular because they allow patients to choose from a very large number of providers. If you need to see a specialist, no authorization is required. Just go ahead and make that appointment. PPOs offer the largest networks among all the plans mentioned in this video. The lowest cost for services is also associated with PPO plans because you get those discounts when using preferred providers. They will prefer your PPO plan and offer fast appointments because they know how much their fee set by the insurance will get paid faster with fewer hassles or delays. PPO plans usually have out-of-network benefits, so should you need or be obligated to seek medical care outside of that network, you are covered. EPO plans, same advantages, but again, the network is smaller. Choices may be significantly limited, access possibly delayed, although there are no hurdles or requirements to see specialists or to obtain most services. HMO patients enjoy a small local network where the primary care physician knows them and their medical conditions well. Convenience is a plus, as most of the medical needs are handled in one place. Records are kept in one office, which makes the process efficient and saves money. No duplication or needless services. As for POS, well, it has the largest flexibility of choice, and it does combine the best advantages of both PPO and HMO plans. The patient gets to decide whether to use PPO or HMO benefits to their best advantage, either clinical or financial. Of course, there are disadvantages. PPO monthly premiums are usually the highest. Why? Keeping a large network of contracted providers happy by paying them well costs money. But if you go out of network, you will be penalized with lower allowances, little or no payment, and a large share of cost. Avoiding duplication of services, for example labs or screenings, by different providers who may not communicate with each other or even know each other, could cost you money. Care coordination, otherwise handled in an HMO setting by the primary care physician, will likely fall on your shoulders, as might keeping track of reports, tests, and medical records. A number of administrative tasks may also fall under your responsibility, as well as finding the right doctor or best hospital from a long list. EPO networks being so small, providers' full schedules can delay access to care and become an issue. Saving on costs could mean having to wait for an appointment, but if you are forced or decide to go out of network, that higher cost could be fully on your shoulders. Now, if you are an HMO patient, whether the small local assigned network and PCP meets all your medical needs or not, you will be dependent on their goodwill. It is that PCP's role to treat as many of your medical conditions or issues as possible. Getting a referral or an authorization for outside services or a visit to a specialist can be difficult at times. HMO patients have complained about limited choices within their medical group and sometimes on subpar care in more rural or underserved geographical areas. And many have complained about having to get stuff done with effort, time, and a lot of frustration. Building a friendly relationship with your PCP and the staff can be to your best advantage. POS patients will navigate two sets of rules and juggle provider statuses. It may be up to them to tell providers whether to use PPO or HMO benefits, as this will affect the contract and payment. Many providers may be contracted with a PPO option of your insurance, but not HMO. If you make a mistake, it could come back to haunt you with a potential heavy invoice. Now, beyond those four main types of plans, there is one that only applies to a small segment of the population. But for those of you between age 18 to 30, or even 26 to 30, as dependents can stay on their parent policy until age 26, that fifth choice may come in handy. It is called catastrophic. It offers high deductibles, meaning very low monthly payments with coverage in case of injuries, accidents, or other catastrophic illnesses. If you are under 30 years old, are in excellent health, lead a healthy lifestyle, have no risk factors, medical issues, or chronic conditions, a catastrophic plan could be well suited for you. It is an affordable way to protect yourself from the worst-case scenarios while paying low monthly payments. But should you need to use it, that injury or unexpected illness may come at a price, as your insurance would not start making payment until a large amount in the form of a deductible was first met. Now for some tips. First, befriend your plan, and by this, I mean two things. First, you must know what your yearly share of cost is. What is your deductible, the portion you must pay before your insurance starts making any payment on your behalf? What is the co-insurance, the percentage that you pay up to a certain amount until the insurance pays 100%? And what is the total out-of-pocket limit? All those costs put together. Another thing is to check on your summary of benefits to get an idea of what your co-payment might be every time you visit a doctor's office or the ER. Know what services are covered in general and which ones might be excluded or limited. And if you need to go out of network, find out what coverage you can rely on. And always evaluate and compare. The cost is not enough of a reason to pick one plan over another. The frequency of use could lead you to choose HMO over PPO or vice versa. Do you prefer a vast choice of providers versus the centralization and oversight by one provider? How healthy is your lifestyle? What is your current clinical status? Are you under treatment? Do you anticipate to become pregnant or have any planned service or surgery lined up? What are your risk factors? The more you use a plan, the more important convenience might become, regardless of the cost. For example, a larger PPO network could be more valuable, but if you are never sick or don't anticipate to visit your doctor except for preventive care services that are free anyway, then a high deductible or an HMO plan might be the best option for you. You could save money, yet still have some peace of mind, knowing that you have health insurance coverage. While I know a crystal ball would be awesome to have, your present medical status and anticipated use in the very near future should be taken into account, as much as the price of a policy and your budget. I so thank you for watching. Your likes, comments, and subscribes help this little channel grow to reach out to many more patients like you. So thank you.